Proud supporters of Africa this week. Engine, with us, you are number one.
South Africa's Minister of Mines, Susan Shabangu, has taken the mining companies to task over transformation in the country's mining industry. Speaking at a nationalization debate in Sandton near Johannesburg, Shabangu said mining companies had to comply with black empowerment and that the courts would not provide a solution.
Standing room only at a hotel in Sandton near Johannesburg for the debate that everyone wants to hear, nationalisation. A room packed with fund managers, asset managers and expectations. Centre stage, the policymaker, Mining Minister Susan Shabangu. In her opening salvo, she made it clear that companies had no choice but to comply with black empowerment codes.
You may go to courts, but you will never ever address matters of our communities if you're not doing the right things. I know a lot of companies currently, they think that the courts are the solution to their problems. They will not, and they will never.
But the minister also made it clear that nationalisation is still mere talk.
It's true, government policy is not nationalisation. I've indicated government believes in mixed economy.
If nothing else, Susan Shabangu is a political survivor, and this was a performance that seemed to go down well.
I came away very sort of supportive of her stance. I think it's mildly encouraging. I think she balanced the sort of political imperatives with the economic pragmatism that the private sector is in fact seeking. I think we do need a sort of legislative stability in this country. I understand that this is a work in progress, that we could do with more sort of clarity.
Twice in the last 6 months there has been talk of her losing her job in a reshuffle. It seems she could survive to see the nationalisation debate through.
People can't seem to get enough of these debates right now. On Thursday there'll be another nationalisation debate held by the South African Chamber of Commerce and Industry. But the only debate that'll matter will be at the ANC Congress next year, when the big decision will be made.
While still in South Africa, the country unveiled a 2.4 billion rand loan to the government of the Kingdom of Swaziland. Swaziland's custom revenue plummeted due to the global economic crisis, a drop in South African imports and a 60% decline in revenues from SACU. This pushed the country into a fiscal crisis and resulted in violent unrest against the government and the rule of its absolute monarch, Mswati III. Swaziland's GDP is at about $3.5 billion.
The Kingdom of Swaziland, a small landlocked country in South Africa that fell prey to the global recession, was today given a much-needed lifeline from the South African government to manage its budget shortfall and avert bankruptcy.
What you have before you is a package of reforms that the Swazi government has undertaken to implement, which would, we believe, as the South African government, assist Swaziland to place itself on a sustainable path, both in respect of its own financial and fiscal situation on the one hand, and in terms of ensuring that all of the people of Swaziland participate in a process which assures them that they have as a governmental system that which they want.
The 2.4 billion rand loan will come from the South African Reserve Bank's coffers with a guarantee from the government of South Africa. Now it will be made in 3 equal payments of 800,000 rand each, the first expected in August this year, the second in October, and the final payment being made in February next year. The repayment period is 5 years at an interest rate of 5.5%. Repayments will be debited from the South African Customs Union account held by the South African Reserve Bank on behalf of the government of the Kingdom of Swaziland. This loan guarantee is conditional on 4 key pillars.
The first is that the government of the Kingdom of Swaziland needs to undertake confidence-building measures within the country in order to create conditions for greater acceptability of reforms within the country itself. Secondly, that fiscal and related technical reforms that are required by the IMF and which are to be implemented by the government of the Kingdom of Swaziland must be given effect to. Thirdly, that from a South African point of view, we've agreed to provide, as we have been doing, capacity building support to the government of Swaziland. And fourthly, that we would cooperate as a South African government with the government of the Kingdom of Swaziland in respect of various engagements with multilateral institutions. We're not only talking about a set of fiscal and financial reforms, we're also talking about a set of governance stroke political reforms. The statement also indicates that there are already processes underway in Swaziland, and you'll know that over the weekend a group of about 14 organizations from civil society met in Swaziland and expressed their need and aspirations for the kind of country and constitution that they want to see. And it's our hope that in order to provide the right kind of direction for Swaziland itself, both politically and financially, that the Swazi government will create the opportunities, as they did over the weekend, for maximum participation of the people of Swaziland in determining their own future. It's not for us to dictate to them.
Results from the South African Investor Confidence Index this week revealed that investors are expressing ongoing optimism about South Africa's equity market. The report is a monthly survey conducted by the Institute of Behavioral Finance among institutional investors and financial advisors. Gerde van der Linde, Executive Director of the Institute of Behavioral Finance, explained the report.
What we've seen, and we do 4 different indexes, we look at the 1-year confidence index, and we've got a buy and dips confidence index, and I'll explain that later. We've got a valuation confidence index and a crash confidence index. So for the past 2 years, we've seen on valuation and 1-year return index that people were quite pessimistic, if I can put it lightly. But what we've seen, especially, and that is quite, it's good news for us, since February this year, we've seen that on the valuation side, that the participants, and I must explain to you the participants as well, we've got 2 groups of participants, the one being the institutional investors, which is analysts, economists, fund managers, and the other being financial planners, which is closer to the man in the street, giving them advice. And both of those groups has been quite pessimistic, always financial planners a little bit more optimistic, because, you know, when you need to work with people, you can't just say gloom and doom. But what happens with the valuation confidence index is that since February this year, we've seen an improvement where most of the participants felt for the past 2 years that the shares, if you're looking at the shares at the stock exchange, Johannesburg Stock Exchange, that it's been expensive. For the first time, they see value coming back. So we only now have, from the institutional participants, 19% seeing the market as being expensive, and the rest see fair value in the market. So if you know what you're doing, you can actually buy good shares.
You've used the word pessimistic quite a lot right now. What's fueling that pessimism, do you think?
I think in the past, the volatility is also an issue, because if you look at the market since, I think, November last year, we've seen a market past the 30,400 mark. But since then, we've touched close to about 32,800 and then lose another 1,000 or 2,000 points just to make it up in the next 2 or 3 weeks, and then coming back. So there's a lot of volatility, and volatility brings fear into the market. So people don't know what to expect and what's going to happen next. But I think what is happening here is the institutional investors have seen good company earnings and dividends in the past 6 months, and they expect that, you know, in a market that's quite low, that if it continues, there's going to be real value.
That volatility, to what extent do your participants believe we could see another market crash? Because there's been lots of talk about double dip recession. Are we close? Are we not close? What do they feel?
If I give you the answer exactly what we ask them, what do you think, what is the possibility of a real market crash in the next 12 months? And we've got 50% of the participants feel there's more than a 10% chance. So this is actually not very high. So I think what they expect is to see more volatility, but not really a market crash. Although if you look at the average expectation, we've been on 15% and they're on 17%. So it's creeping higher, but, you know, I don't think it's a real fear factor at the moment for those people that know the markets.
South Africa's employment equity reports have traditionally invited discussion and debate, especially around levels focusing on top management, senior management and professionally qualified levels, as this is where previously disadvantaged groups are mostly underrepresented. Kanyisile Kweyama is a commissioner at the Commission of Employment Equity.
I think the main findings of the report would be that transformation is still relatively slow at particularly the levels that you mentioned, the top senior and professionally qualified levels. However, we did see some improvement in terms of the technically skilled levels just compared to the EAP, and that is the economically active population. Now, if you just to take you back a little, each employment equity report looks at the total workforce that's employed, basically, and that's where the term EAP comes from. And as we look at the various levels and analyze the data, we compare that to the economically active population.
Let's talk about that slow pace, because the Minister of Labour was lamenting the fact that it's too slow, you know, basically saying that of 86% of the workforce polled, we're only seeing modest changes, I think 16.9% at top management level, something like 35% at senior management level. Why are we failing just to break that glass ceiling? What's the problem here?
You know, there's a combination of history in terms of that black people were traditionally not in those positions in the workplace, and to get that on board is taking a little bit. But in the last annual report, and in this one as well, we are saying that we are probably seeing a bit of sluggishness in terms of the workforce in just getting up to speed and getting that done.
Is that a skills issue? Because that's what we're told. You know, the reason why we can't reverse the atrocities of apartheid in the boardroom is because you've still got an education crisis that speaks to the heart of training black professionals.
I would say a bit of that, but if you look at the stats that you just mentioned and looking at the skilled level, that says that is improving. And in any business, you should then start rolling up. So it says that the skills are coming out. Previously, I don't have that report in front of me. When we released, we did some research on the skills coming out of tertiary institution. It said that there are more black graduates coming out in the specific skills. You know, we could go and break it down sector by sector, looking at scarce skills, at chartered accountants, at engineers, at actuaries to go deep and drill in. But if you're going to look at it at a very broad level, you'd say, you know, the skilled level is talking to the fact that there are skills coming into the workplace, and we should therefore be seeing it starting to filter in.
Africa's first high-speed train finally linked the metropolis of Gauteng this week after much delay. Commuters between Pretoria and Johannesburg finally get the opportunity to take the Gautrain to and from work.
It was not even light out today when a hustle and bustle started in the centre of Pretoria, and commuters hopped on the first Gautrain journey to the Rosebank station. For 46 Rand a trip, travellers can abandon their cars and at a top speed of 160 kilometers per hour, wish over and under congested highways and get from Hatfield to Rosebank in just a couple of minutes.
Most importantly for me today, I want to thank Gautengers. Already by 7 o'clock, we had almost 2,000 Gautengers on our trains. By 9 o'clock, we had almost 7,000 train passengers. That is fantastic, and I want to just thank Gautengers for coming out and supporting us.
People who use the train will be on time, even if they are connecting from Park Station to Pretoria Station or to Hatfield, will be on time, be able to spend time with their families and all of those things.
But the project has not been without its problems. After completing the initial line from OR Tambo International to Sandton, which happened just a little over a year ago, the second line, which would connect Pretoria and Johannesburg, was expected to open in March this year. But the deadline kept being moved further down the track.
While the train's reach now extends just a little bit further, the full line is not yet operational. The section between Rosebank and Johannesburg city centre is not yet open. This section has been plagued by water seepage in the tunnels, and the delay has cost over 2 billion Rand to the project, pushing it over just 30 billion Rand in total.
I think it was the right decision that we delay the final leg for 6 months. There's substantial remedial work required, and we as the independent certifier, we have to sign it off before we finally open that section, and we hope that that will be by the end of the year. And there's a very good plan in place by Bombella to do the additional grouting, and that's been reviewed by international experts all around the world.
We're looking at around about November to have that done, but if we've waited so many years, what is a few more months?
Johannesburg is one of the 10 most congested cities in the world, and while the Gautrain line is still not fully operational, at least commuters from the Boerewors-Curtin are only too pleased to avoid rush hour traffic.
The nice part is you know when you're going to get to work. You don't have to think maybe it's going to take 3 hours or maybe it's going to take half an hour.
I travel 65 kilometres to work and 65 back, and sometimes it takes me 2.5 hours. This I know it's going to take me an hour, so it's great. My boss will be happy.
The trains are always on time, the ride is smooth, it saves you sitting in the traffic, it saves you money, and I love it. I use it all the time when I travel.
It's fast, besides that it's convenient, and no hassles, packing and the like, and that's it.